Here we go with another lesson. Now we see the examples, the real examples on chart about the trading ranges, how does it work, how to find it, and so on and so on. One thing I would like to point out before starting, I forgot to say it in the other lesson, is that this is not created, is not a strong high. Like this breaker structure doesn't create, this doesn't become a strong high. This doesn't create a strong high, strong low right here, sorry. This doesn't create. What we want to see is always our formation, not other things, which is this and this. Okay, this is not a breaker structure that creates our formation. Keep in mind, please. So let's get started showing trading ranges. Now on the 1 hour, then we will see more examples on different time frames. Let's look, for example, here. Okay, perfect. We have our formation with, let me do it like this, breaker structure to the downside here, breaker structure to the upside, strong low being created. We go to the upside, then we have breaker structure to the upside, breaker structure to the downside. This whole thing becomes our trading range, okay? And we need to determine if we are bullish or bearish. This is very important. We are bullish in this case after the breaks of structure to the upside, and therefore we're looking for buys. Now, of course, you need to come back in order to understand internal and external liquidity, but what happens after break structure and the trading range being created is we go for internal liquidity. We possibly have a trade here, then we come back down, we go for more internal liquidity because this was created by news, but this is another story. Don't think about it too much. It's covered on other videos, and then we continue to the upside with our bullish momentum, as you can see. This is an example of trading range. Let's see some other examples. Of course, these are all trading ranges. It's just we will need to go on lower time frames to see them better. So I'm just focusing on the ones that are more clear on the 1 hour to show on the 1 hour, but then we will have for sure other trading ranges examples on lower time frames. Here we have break to the downside, break to the upside, strong low being created, continue to the upside until we have this break here, strong high being created. This strong high is eventually taken out. This move is by news for sure, these type of candles. But anyway, this stays strong high. This becomes a strong high just because it was news. But anyway, you get the point. This becomes the new strong high. This becomes our trading range. And we want to trade along the trading range, possibly look for buys. This is the first buy we will look at from here, since our trading range is bullish for now until we turn bearish right here. And then we can look for more buys until a strong low is being created, but it is only created here. So for example, let's look how to avoid possible losses. Here we have strong low created, break structure to the downside, break structure to the upside, possibly looking for buys. We look for buys on lower time frames. Of course, you can have a 1 to 10 by going on the 3 minutes and 1 minute, as we are doing already in this move. Actually, we need just one bullish candle to have a 1 to 5, 1 to 6, a 1 hour candle, I'm saying. Anyway, here we have good trades to the upside since we established trading range was bullish, and we were looking for buys until a strong low was created. Strong low is finally created. We're looking for buys to the upside here. We stop looking for buys when we start continuing to the downside. We don't create any new strong low. Here there is weekend gap, and then it just continues to the downside and is not valid anymore. Now, what happens here again on the 1 hour? Examples on the 1 hour. Break, strong low being created, break, strong high being created, trading range. Here it is, our trading range. Here is our external liquidity. Here is our some internal liquidity right here. Go back after watching internal external liquidity video. And then let's see if this is a strong low. Yes, it is a strong low by a few pips, because as you can see, it goes below and then it breaks to the upside. This becomes a strong low, and therefore we're looking for buys. We're looking for buys, and we can target all the way up to this area. We're looking for buys. Let's do an example. We're looking for buys. We have break structure to the upside. We start looking for buys here. We can already enter from demand. This is all demand, the last move to the downside before the move to the upside. Let's say we just have, I never trade just on the 1 hour, not at all, but it's just an example. And the other way around. And this would be 1 to 5, going on lower time frames and looking for confirmation. This can be 1 to 20 or more. But anyway, you get the point of trading ranges. Now, let's do some other examples. Just trying to look at some clear examples of trading ranges. Here we have some. Strong low being created. Break, break, strong high being created. Our trading range is this, and we're looking to enter buys. Here we don't come at discount level, so we for sure don't enter these buys, but it's just to show you. Then we continue to the upside. Here a strong low is not created, at least in the 1 hour. Strong high here is created, but again, here will be no trade because we don't come back to discount. Just to show you the strong highs and strong lows and the trading ranges. Okay. Now, why did I look for this buy on EURUSD right here? We have breakout structure to the upside, strong low right here. Let's go on lower time frames to show a little bit better this example. Trading ranges are, you can use it on any time frame. You just need to understand what you're looking at. So breakout structure to the upside. This means that we will go for some internal liquidity. Here we have internal liquidity. This is our trading range. We just grabbed external liquidity. We need to go for internal liquidity. So right here, and it is being taken. This is our trading range. This is the strong low, break and break, strong low. This is the strong high for a break right here and a break to the downside right here. When I say break right here, means that we break structure and then we break structure again. Okay. Therefore, strong high is being created. We wait for some liquidity to be taken. Here, internal liquidity is being taken. We're looking for entries, went on lower time frames, and what happens? You can already see it slightly from here. Break to the downside, break to the upside, strong low being created. I found an entry here on lower time frames, but possibly what happens, we go to the upside, we come back, respect the strong low, continue to the upside, another break structure. Okay, and so on and so on and so on. This is just how the market moves. Let's go to gold for a couple examples. Gold. Here, I want to cover this for sure, but maybe on the fake change of character video, which would be better. Let's look. Gold, perfect. We have, sorry for the mess a little bit. Let me take off the Asian session so it's clear. So we have breakout structure to the downside, breakout structure to the upside, strong low being created. Here, what happens? Breakout structure to the upside, breakout structure to the downside, strong high being created. This becomes our trading range. We will need to go for some internal liquidity. Again, come back after seeing the internal liquidity video. Here, we go for internal liquidity, we take it. Possible trade. Now here on the 1 hour, of course, you don't see the strong low being created right here. We will need another time frame, or you can kind of see it, but of course, it's not the best. Here, break structure to the downside. Here, break structure to the upside. On lower time frames, there were smaller setups right here for a very good trade. But anyway, I'm just showing you the trading ranges on the 1 hour, for example. Here we have, again, another example. Break structure to the upside, break structure to the downside. I don't know if you can see it. Wait. As you can see, our usual, okay, break. We go to the downside until we create what? Always the same thing. Break, strong low, strong high. Direction is bearish. Therefore, we want to look for sells. Internal liquidity taken, internal liquidity taken, internal liquidity taken, or the block reached. Possible confirmation, lower time frames, continuation to the downside. Okay. I think it is a little bit more complicated than the concepts you are used to. But this is how the market moves. You need to understand trading ranges. You need to understand in which direction you want to trade. So the trading range is important to understand in which trading range we are in, but you need to use the trading range according to the direction, because I, of course, understand that my trading range goes from here to here. But then, of course, if I'm looking at the market, the trading range will also be created from here to here if we have our formation here. Okay, so what is it? Are you going to focus on this trading range looking for buys here, or will you be smart? Of course, everyone messes up sometimes. We're not perfect, but I'm saying will you be smart and understand which direction the market is trending, and then based on that you will look at your trading range. Because of course you can find a trading range from here to here and then look for buys, but that will not work because the direction is bearish. We have break of structure to the downside, strong high being created right here because of our formation, strong low being created right here because of our formation, and trade after taking internal liquidity and reaching our point of interest. Okay, alongside the trend. Very, very important. Of course, there are also ways to trade against the trend, but more risky, less probabilities. We will talk about it. Again, thank you for watching this video. You need to practice and look at charts a lot. You know, if you want to learn, if you want to be a profitable trader, it is worth it in the long term. If you dedicate enough time, you can achieve consistent results if you work on your mindset, psychology, and if you work on charts. You need to train your eyes to see things on charts continuously, to see the correct things, to not mess up certain things. When you mess up, you journal it and you go back to it. You see all the trades that were good, what things they had in common. You see all the trades that went bad, what they had in common. And over time, you will achieve great results if you put in the work. It is not easy. Let me tell you, it's not easy to be funded. I just passed 2 weeks ago, 200K funded account. I passed the verification. And 2 days ago, I passed the first phase of another 200K funded account. And now I'm doing the verification. Let me tell you, of course, it's not easy. It's not an easy road, both on charts and on psychology, because when you see yourself going into drawdown, it's hard. When you see yourself almost passing the challenge and then losing 2 trades and going back to, I don't know, plus 4% and you were about to pass it, it is hard. Work on yourself, work on charts to see things, and aim for consistency, 10%, 15% every month. It is not easy. Good investors aim for 10% in a year. We are aiming for 10%, 15%, 20% in every month. I'm aiming for a little bit more because I've achieved that phase already where I have some consistent results at a certain percentage. So I can set the bar higher and go, okay, I'm at this much percent. I want to achieve 25, 30%, 40% per month. And I'm working towards that because it is possible. The same way it is possible for me to achieve 15, 20%, it is possible to achieve 40, but it is hard. It is the same way it is hard for you maybe to go from being inconsistent to getting 5%, to being just break even, and then from break even to going 5% per month, then from 5% per month, going 8 or 10% per month. And at that point, you can start trying funding challenges. And then from that point, you try to go 15, 20, the same way you are trying to do that. I'm trying to go to 40, 45, 50% per month. It is not impossible. It just takes time and work. So make sure to take these concepts, backtest them, and try them a lot on charts. This doesn't mean that you go live in market, go full margin in next trade just because you see a trading range. No, go and backtest them a lot. You need to train your eyes to see these things. Thank you so much for watching. There will be case studies, there will be videos, there will be live trading about these things. So make sure to not miss them, because here, these are video of the course. These are videos of the course, but at the end, you will see many, many more examples in the case studies, in the live trading, and so on and so on. Thank you for watching, and I'll see you on the next video.